I remember one of the first times I saw my investment portfolio dip. I opened the app, everything was red, and I kind of froze. I thought to myself, I just lost a bunch of money. Like, why didn't I just keep this in my bank account? And the first time I saw my portfolio drop in value, I didn't know that dips were normal. I thought it was normal that it would just increase at all times. I really didn't understand the concept of dips and when the market goes up. So it ultimately just made me question everything. Like I said earlier, did I make a mistake? Should I not have invested this money? And that's ultimately what this video is about. It's been 3 years of June 2025. It'll be 3 years since I started my investment journey. So this is going to be how I personally learned to deal with market dips and volatility without stressing out too much. And I'll share what helped me stay calm through it all, and maybe it'll help you guys out too. So part one, why dips stress us out. It ultimately makes sense why we freak out. No one really teaches us how to handle this stuff. And like I said, personally, I wasn't really understanding the concept of that. Hey, the market will dip. It will decline for months at a time, years at a time, possibly. You just have to work through it. No one really teaches you that. So when things go red, it felt like I made a mistake, and it ultimately will feel like you made a mistake. You'll be asking yourself, did I invest in the wrong thing? Should I pull my money out while I still can conserve some of it? And then you go on social media or you go on the news and you see people, flexing their wins, saying that they predicted the crash, that they made a ton of money, or that they're selling at a cheap price. And it just adds that more pressure to you. Like, wow, why did I do this? Why didn't I wait? Why didn't I wait for the crash? But the market going up and down is completely normal. You have to tell yourself that. You have to remind yourself that. It's part of how the whole thing works. Part two, what's actually helped me personally. There's a few things I try to focus on when the market starts dipping. One, just zoom out your perspective on it. When you only look at the day to day, yes, it feels chaotic, it looks chaotic. But over a few years, or in our case, if you're in your 20s or 30s, look at it the next 10 years, 20 years, 30 years, you realize most dips barely matter long term. As long as it's increasing at a steady rate over the years, you're golden. That visual shift really helped me not overreact, and I hope you can take that advice too. Two, I keep investing. I used to hesitate when things looked rough, but honestly, that's when everything's on sale. I mentioned this in a previous video. It's like a fire sale of stocks. So if I can, I try to stay consistent. I try to continue with my dollar cost average, same amount, same schedule. I found that really helps take the emotion out of it. You just kind of get in that automation mindset where whether it's up or down, you're still going to put that same amount in if you can. Three, I focus on what I can actually control. I can't control what the stock market does. You may think you can, but you can't. But I can control how much I save, how I budget, and how consistent I am with my investing contributions. And lastly, if I'm really feeling anxious, I just step back and take a break. I close the apps, I stop checking things, and I step away for a bit. If you're really stressed out about the market, if you're really, really concerned about the decline, and you want to hold on to some money so you have cash on hand, take a month or two off of not investing. I personally probably will not go that route, but if you're really that stressed about it, just take a few months off, build that reserve in cash reserve you got, and just wait out a little bit and try to calm your nerves. Part three, a quick reality check. Here's what I try to remind myself. This isn't about being perfect. It's about staying in the game, staying in the market. Market dips don't mean you failed. They just mean the market is doing what it always does. Sometimes it has to dip, sometimes it corrects itself. It's the nature of the beast. And honestly, the more calm I stay, the more I realize I don't need to, quote unquote, do anything in the moment. Just ride it out, stay focused, trust the plan, do your dollar cost averaging, you're good. So those are a couple things that help me through the ups and downs of the market, especially in my 3 years of tenure of investing. I think I checked back on my portfolio, and I actually started 3 years ago to this exact month. June of 2022 is when I officially got my first 401k from my company, and then I started investing in my Roth IRA. So that's ultimately where my investing journey began. So it's kind of cool to see, kind of take a step back and see, wow, I've done this for 3 years now. Like the time just flies by. It's incredible. So if you're ever feeling unsure or anxious, feel free to drop a comment. I'd love to hear how you're dealing with it. Share your perspective. Maybe we can all help each other out. That's the goal of this channel at the end of the day. Help each other out, offer each other valuable advice, and hopefully a little bit of entertainment in the background. So, as always, I want to welcome the new viewers. Welcome to the channel. These are the types of videos that I usually upload, and always I like to thank the returning viewers. As always, I appreciate you guys tuning back into my new content. And at the end of the day, if this helped, please give it a like, subscribe for more finance and mindset stuff, and I'll see you in the next one. Have a good night.